Well, it's time to do business again. Welcome to Business Incorporated. We have 25 minutes for updates from the world of business. And here's what we prepared for you. Gold field in Ghana, that's surging. And there's a recovery still sustained in Bitcoin, but for how long? And Libya is extending its tentacles when it comes to oil deals. Welcome to the program. We start, talking about oil, the prices we see. It has dropped to a one-week low today. Traders are shrugged off the latest U.S. sanctions threat against Iran, viewing economic pressure as posing less risk to oil supplies than a military escalation. So we saw a drop this morning, and we saw it dropping further later on in the day. At this time, it's 3.29% down at $89.14. So we see Brent has lost that $90 level, giving a bit of relief to a lot of investors and economies, not just investors. WTI has also dropped 3.34%, $82.17, and gas is down more than 1.5%. The price is at about $2.74 at this time. And crude has dropped, and we see, following that reduction in the fear, we could say, by investors after the U.S. said that it had released some of those sanctions against Iran, and investors see that it's not as harsh as a military escalation. And so around that, Libya state-owned National Oil Corporation, they've announced that it had reached a production sharing agreement with U.S. energy giant Chevron as part of an international tender that's aimed at expanding exploration and development of the country's oil resources. The agreement will support the exploration and development of Libya's resources and enable the NOC to benefit from Chevron's technical expertise and advanced technology. This has been shared by the company. And furthermore, concerning that, the agreement, Chevron has confirmed the agreement, and it covers an area in Libya's Sirte Basin, saying that it looks forward to working with NOC and other key stakeholders in Libya. The block was awarded to Chevron in February as part of an international tender launched by Libya in 2025, as authorities seek to attract major international energy companies and increase oil output. Libya relies heavily on oil exports for government revenues, making the expansion and protection of the energy sector a central priority for the country's authorities. The NOC says the agreement will contribute to increasing production and support the national economy. Still around oil and gas, Brazil's state-owned energy giant Petrobras is expanding its interest in Africa, entering negotiations for 4 offshore exploration blocks in Ghana's Keta Basin. The potential investment could bring additional exploration activity and fresh international capital into Ghana's oil and gas industry. It also highlights continued interest in the country's offshore resources as Ghana seeks to attract investment and expand its energy sector. And in North Africa, Egypt has awarded 6 LNG cargoes for September delivery in its latest buy tender, following an attack on one of its floating import terminals at Damietta port at the Mediterranean coast in late July. Egypt transitioned from a major LNG exporter to a net importer due to declining domestic output, such as from the Zohr field and surging domestic power demand, though it continues to operate key liquefaction facilities like the Egyptian LNG plant in Idku. Let's get away from the oil and gas for now. Gold prices fell today, but is hovering around their highest level in more than 3 months, supported by a weaker US dollar as the US Treasury's bond buyback plans. Now, looking at the numbers, we see more of red for the metals. Spot gold has dropped 0.10%, and the price is $4,693 per ounce. Spot silver has gone down much more than that, 0.79%, $68.01. Platinum, about 1.5% in the red, $1,860.60. Palladium, almost 2.5% down at $1,329.50. Copper is the only one in the green at this time after increasing 0.68%, about $6.65. And closely related to that, Ghana's gold industry is recording a strong performance as mining giant Gold Fields reports an 81% jump in half-year profit. The company says that the result is supported by higher gold prices and improved production. However, despite the strong financial performance, Gold Fields says uncertainty surrounding the renewal of its mining licenses in Ghana remains a concern. The development highlights both the strength of Ghana's gold sector and the challenges facing mining investors. Meanwhile, Ghana's gold industry is facing fresh pressure, with some gold buyers reportedly waiting weeks for payment from the state-backed Gold Butt. The delays are affecting the ability of some operators to purchase gold from suppliers, with some businesses reportedly turning to borrowing to maintain operations. The development comes as Ghana sees greater control over its gold trade and works to strengthen the country's foreign exchange position through gold exports. And in Zimbabwe, Artisanal Miners Association are asking the government to extend mining formalization deadline. The Zimbabwe Artisanal Miners Association has petitioned Mines Minister Polite Kambumura to extend the deadline for mining formalization, warning that the tight time framework risks sidelining thousands of small-scale miners operating in remote areas. The Mines Ministry had set August 30 as the final deadline for mining title holders and operators to regularize outstanding obligations and formalize their operations, failing which they risk losing their rights. The formalization drive aims to curb illicit mineral trade, increase national tax revenues, and empower local indigenous citizens in the extractive sector. And Kenya is significantly raising its energy ambitions, with the government targeting 5,500 megawatts of additional electricity generation capacity. The plan includes investment in geothermal and hydropower alongside nuclear energy. Kenya already relies heavily on renewable resources for its electricity, and the new target is aimed at meeting rising demand while supporting industrial and economic growth. The government says the expansion will also strengthen the country's energy security. And Ethiopia is moving closer to resolving its debt crisis after official creditors back a preliminary restructuring agreement involving the country's $1 billion Eurobond. The agreement could help Ethiopia make progress towards resolving its default and restoring confidence among international investors. The development is part of a broader effort by the government to restructure its external debt and improve the country's financial stability as it seeks to attract more investments. Let's head to the markets now, beginning, here in Nigeria, the market is closed, so the numbers remain as they were at the close of trade yesterday. We have there in the red. Let's move over to the Middle East and see what the colors look like. We see Abu Dhabi, Dubai, Tadawul, and Qatar. Most of them are in the red except for Dubai. And then for the United States, S&P posted a losing session. Investors are turning cautious ahead of NVIDIA's earnings and a key inflation report that's due later on this week. And so we see those colors right there. Well, let's hop to Asia and see markets closed mixed at the close of trade. South Korea's Kospi, we saw that rose at 0.68% at the close of trade today. Let's see what's happening in Europe. We have Lars joining us for this. Hey, Lars, good afternoon. Welcome to the program. It's a holiday here in Nigeria, so the markets are closed. I wonder what's happening there in Europe, especially Germany. Hey, Lars, can you hear me?
Oh,
great.
Hello, Ini. I guess you can already hear me. I wasn't able to hear you because I think I wasn't quite ready here. But good to be with you, Ini. And now I can actually hear you. I'm sorry about
this. That's good. That's good, Lars. So I was saying it's a public holiday here in Nigeria, so the markets are closed, the money market, the capital market. I wonder what the situation is over there.
Yeah, that would explain this little time lapse here, of course, Ini. Well, we do not have a public holiday. We do have the markets open, Ini. And there's a lot of green arrows across the board for all the European markets, as a matter of fact. All the major indices up, if only by fractions. For the DAX in Frankfurt, one reason might be a better than expected business climate index, with businesses reporting that they're a bit more optimistic on their outlook than they were just a few weeks ago. However, it's very unclear why. Of course, the economic environment in Germany remains tricky. Energy costs are high. We're having that drought with problems and higher costs in shipping. We have problems in the agricultural sector. We're still having, of course, the uncertainty over Iran and also ongoing trade troubles that are worrying exporters. So some economists are wondering why the index even came out as good as it did. But Ini, apparently it's good enough to keep markets up for the moment.
Yeah, well, that's good news one way or the other, Lars. And I see that you have made in Germany. I don't know if you guys are copying us. We have made in Nigeria. We're trying to push that for more patronage on Nigerian-made products. But you have made in Germany, a trademark for Germany's industry for decades. It's helped the country to achieve a good place when it comes to leading the global economy. But for the last few years, it does seem like it's not as strong as it used to be. What's going on there?
Yeah, we're seeing a lot of the companies that used to make the German industry big. We're seeing them sold, and right now we're talking about a company by the name of EBM Papst, and that is certainly not a household name, but that is exactly what makes this story so interesting, because for decades Germany's economy has benefited tremendously from these so-called hidden champions. Those are highly specialized small and medium-sized industrial firms that are often actually still family-owned, and they were kind of flying under the radar for many people, but they sold their high quality products globally, and they played a major role in the supply chains of some of the biggest players in the world. And now as for this particular company, EBM Papst, they're a fan manufacturer based in a tiny village in southern Germany with only 4,000 people there. And that company just got sold to a large US corporation, Madison Air, for almost 5 billion euros. Wow. Madison Air works in air filtration, purification, healthcare, residentials. They do clean rooms, those entirely dust-free environments that are necessary to manufacture semiconductors, for example.
Well, that's a lot of money, I guess. The proprietors should be happy, but how's the company perceiving this takeover?
Yeah, they actually kind of welcomed the news. The employees did, and also even the Workers' Council. First of all, many, of course, see this as a guarantee for their jobs, because, it seems pretty clear that an investor putting up that much money, like we said, almost 5 billion euros, they will want to keep all the highly specialized employees on staff. But there are also some that rightly point out that EBM Papst has already had solid finances, and the business was growing, not least, of course, due to the booming AI business, which of course has led to huge investments in data centers, in chips, and all that, of course, creating demand for fans and for the technology that the company has always been leading in. Now, some are worried that a change in ownership might bring changes to the company that might have never been necessary given how well it was doing. At the same time, with the current trade troubles between Germany and the US, it became obvious that a lot more manufacturing would be forced to move to the US as not to be cut out from a global market. And while giving in to demands that in a way, of course, originated with the Trump administration, while that is painful for many, it does, at least for now, make for good business.
So when we look at the bigger picture, I see a company like this being taken over. What does it tell us about the German economy? Is there a trend here, or is this just a one-off?
Yeah, unfortunately, this is a trend, and the big question is really how will that impact us? But in fact, the number of companies being sold to US investors has risen in recent years to 76 last year, and that number growing. And the value of the deals has risen to almost $30 billion last year, also right now growing. It seems that the US companies, they're a little bit on a shopping spree here in Germany. They're benefiting from cheap capital on the home turf. Now, 2 years ago, US investors bought an air conditioning firm, Viessmann, they're called, one of the largest in the business. This year was a steel specialist that got bought, also a company focused on boat engines, a measurement technology provider, and a maker of pumps, and a maker of steel frames for solar panels recently. The list really, Ini, goes on, and all taken together, Germany seems to lose its leadership in these key sectors, including some future technologies and supply. And that, of course, weakens the economic standing of the country in the long run. Now, as of now, none of the companies taken over has lost or cut any jobs. But you know what German ingenuity and hard work have built here over decades, while it might physically stay in Germany, it's now owned by investors from far away. And that is certainly a trend that has many people here worried.
Yeah, I guess. It's a worrying thing. It's a concern when you look at that transfer. But thank you so much, Lars, for giving us updates on this.
Thank you, Ini.
Let's head to the crypto space. It's been good news since this week, or even before this week. Even though we see it does seem like the red is spreading, but at least for now we can still say that Bitcoin is still on the rise, 0.19% in the last 24 hours. The price is 78,959.94. We lost a bit from Ethereum. Ethereum, remember, we had about $2,800 yesterday, but now it's dropped to $2,464.86. And we had more greens yesterday. So I wonder if the recovery is ending. Or it's too soon. How many days have we had that now? I thought we'll have it for a bit longer because it's looking threatening, like the red is spreading this way. But let's see anyway. Let's speak to Cheron Denia. He's the Chief Executive Officer of Credo Limited. Joins us to share his thoughts on this. Good to have you on the program. Been a bit, but good to have you at this time. Cheron, welcome to the program.
Good afternoon, Nini. Thank you for having me. It's been a while.
Yes. So, I wanted to be so happy. We saw green, mostly green, like Ethereum was at 2008 plus yesterday, but it seems like the red is back, is coming back. We can still celebrate Bitcoin, but what's driving this green that we've seen in the last few trading sessions?
What we are seeing with cryptocurrencies and Bitcoin, particularly today, just not another speculative rally. It's responding to the same kind of global forces that we see that move, commodities like gold, other currencies, bonds, and institutional portfolios. So right now, what it is there's adoption. We can see that there's a lot of adoption. There's been some sentiments around the US debasing the US dollar, and then at times like this, people always try to look towards other kind of currencies or other kinds of assets. And of course, gold being some of them, and Bitcoin now has been increasingly available through the ETFs. And yes, we are seeing that move right now.
So are you referring to, we know the US Senate has been debating about some rules and all of that. I think they fixed Wednesday and all of that. Is that part of the driver?
Yes, that is also one of the drivers. There are rules that have been set. The president has been speaking to the Congress about creating better rules that will enable cryptocurrency companies or token issuers to be able to raise significant amount of capital from the open market. And that definitely is something that is a driving force and shows more confidence for the cryptocurrency markets within the US. And we believe it's global. So we're seeing the impacts globally.
Yeah, and I guess if this goes through in the United States, we can expect other countries to also become a little bit friendlier to crypto, because we've seen a lot of countries talk about regulation of that space.
Yes, and we see that even last week, our own Nigerian SEC also released new guidelines or additional guidelines to cryptocurrency regulation. Also, sometime last week, the NRS, which is Nigerian Revenue Service, also had a stakeholder engagement with all virtual assets and taxation of virtual assets. So we see that increasingly, even locally in Nigeria, there is more attention to digital assets from all sides of government. And we know that the Virtual Asset Regulatory Agency or Virtual Asset Regulatory Council, as it were, which is a combination of the CBN, the NRS, the SEC, and the Office of the NSA, they all come together to actually provide proper regulation for the Nigerian cryptocurrency space. But yeah, it's also, I think that's also one of the major drivers, as I know Nigeria is one of the big consumers or users of digital assets. So one of the SEC, NRS, everybody's talking about it. I believe we also played a part in this bull run.
It feels good that we can make impact. but Sean, I mean, there was also part of it. I think it was last week where the SEC has increased registration fee and stuff like that, about 30 million. What are reactions? What reactions are you getting on that?
There will always be reactions, both positive and negative. But the most important thing is that we need innovation and we need investor and consumer protection. And we also need to protect our financial integrity in Nigeria. So what the SEC is trying to do in a nutshell is not just raise the bar to reduce innovation, is to actually let people if people are not able to come up with there's also a 2 billion capital, for cryptocurrency exchanges. For people to harmonize, people to come together, because as it is, it's still they are financial instruments in some way, and we need to be able to protect our people. So we need to ensure that smaller organizations who may have challenges with this, with coming up with those registration fees or with the capital base, they can all come together, merge and form larger organizations that will be proper, that can put together that capital, that can also be able to, at the end of the whole day, it's all about protecting investors and consumers, for investing investors and consumers. So I think there are a lot of people who are kicking back on it that yes, the entry level is too high, but the DG of the SEC has reiterated severally that these efforts are in order to protect the industry, protect consumers, and ensure that businesses who are coming into the fold have the required capital. Same way with the central bank, in terms of licensing for BDCs, for other businesses that require licensing and require financial transactions, there's usually some kind of capital deposit that is made. And this is not the SEC holding on to the money. It is you being able to show that you have this amount of capital in order for people to trust you, to be able to bring and trade their assets on your exchange.
So I guess you're one of those who believe that, the fact that we even have government attention gives credibility to that space. And so, but where do we go from here? Unfortunately, we've seen Ethereum has dropped compared to what it was yesterday. The peace talks not holding. But, of course, a lot of people are saying that the threat of economic sanctions on Iran it seems to have been worse than the sanctions themselves. So markets and investors are coming down. What else do you see happening in the global space to affect sentiments in the crypto community?
The major thing is a lot of people are taking profit. Remember that these digital assets are readily available. People who we've seen north of 30% growth in the past couple of days. Yes, people will take profit. The traditional investor probably doesn't see 30% in a year. So if people who have made some investments when the prices were low are seeing 30% in the space of 1 week, a lot of people will take profits. And of course, we also have other economic factors. But the major thing is, as these assets are highly tradable, people will buy into them, people will take profits. And remember, we also have futures being traded. There are people who have also bet that they place future trades for the prices of these cryptocurrencies going up. And when we're in a bull market like that, everybody is probably facing 100x And the market has to correct itself at some point. Otherwise,
I mean, what am I in the market for? I'm in the market to make money. So, I mean, when there's profit, I have to take. Thank you so much, Cheron Daniel, the CEO of Crello Limited.
Thank you very much, Jenny. Glad to be here. Have a great day.
Yeah, you too. So that's it from the crypto space and on the program. Thank you so much for being a part of Business Incorporated. Work begins again tomorrow. Well, there was work for me today, but we'll meet again tomorrow. No market today. So I'll see you tomorrow.